The stock market is rigged. You can still make money, but you need to know when to get in and when to get out. The market makers, hedge funds, and fund managers are playing by a different set of rules. They trade securities in dark pools inaccessible to individuals. They have more information, faster trading executions, and powerful algorithms all working on their behalf. Investing and trading doesn't have to be difficult. With the right tools and information, you can beat the street. Take advantage of our upcoming pre-launch event and be one of the first to access these tools. Watch this video to learn about our analysis, and then sign up at conquerwallstreet.com for all the pre-launch details. Welcome to Conquer Wall Street. First things first, I am not a financial advisor, and this video is for educational and informational purposes only. Okay, let's get right to the charts. Yes, it's painful having to look at these bear market charts, but we have to stay sharp if we want to prosper. First, we have the Dow Jones Industrial Average, which was down 4.98% this week. The S&P 500 was also down 6.14%, and the NASDAQ took still another beatdown, finishing with a loss of 4.79% this week. As for the dominant cryptocurrency tokens, Bitcoin is currently down 22.4% for the week, and Ethereum is looking at a loss of 23.61% for the week. So, what's moving the stock and crypto markets this week? On Monday, markets freaked out over the thought or possibility that the Fed might raise interest rates by 100 basis points to combat inflation. Notice that on Monday, the Dow closed down 875 points and the S&P officially closed in bear market territory. But you, my subscribers, weren't surprised because I told you in last week's analysis that markets are fearful about the upcoming inflation data. If you didn't see that analysis, I'll attach a link in the upper right-hand corner. At that time, I showed you this chart. I said that this is the line in the sand. If we close below this line, we're in official bear market territory. People are going to lose their marbles when their 401ks start to drop, and the media will pile on with lots of FUD, accelerating the losses. Just look at this article. Now the media is talking about recession fears. Now, after a greater than 20% loss in the S&P 500, not weeks ago, not when the S&P 500 closed below its 200-day moving average, and not after the CPI data showed inflation at a 41-year high. Then, on Tuesday, Powell signals the Fed will stay tough on inflation. Don't buy the hype. Yes, there was a bounce, primarily on the news that the Fed only raised rates 75 basis points, and the market was bracing for the possibility of more. Don't be fooled. This is just talk to calm the children. The underlying economic problems still remain, and this news fixes nothing. This news also affects the crypto markets because crypto is the ultimate risk-off asset right now. Crypto is in its infancy. When markets go risk off, crypto leads the way. I've been pounding the table on this, and this is why I was skeptical of the last bounce we got in the SPY ETF to the 415 level. In my previous analysis videos, I told you that the SPY was leading crypto to the upside, and that's a bad sign. So, what's the news moving the crypto markets? Binance is in the news. Binance is dealing with negative pushback over a recent withdrawal freeze. To make matters worse, the SEC is in full crypto attack mode, alleging that Binance's BNB token might be an unregistered security. Could this be XRP 2.0? Time will tell, but this is worth monitoring. In other news, Shiba Inu plunges and adds a fifth zero to its price. This is in the news now. But again, if you've been following me, I called this before it came out in the news. Just last week, I called for Shiba to add a fifth zero. Now we have it. I'll provide you with another look at the chart a bit later in this video. On the bullish side of things, a major developer of Shiba Inus has hinted that the release of the Shibarium, Shiba Inu's Layer 2 solution, may be coming in the near future. And with my final piece of bullish crypto news, we have a Bank of America survey that tells us, yes, crypto is in a bear market, but 91% of the people they surveyed still plan on buying digital assets in the next 6 months. So, what are my thoughts? For me, nothing has changed. I saw this coming. I've been selling my long positions months before we entered into a bear market territory. And I've been scaling into short positions via the SPXS ETF since February. Maybe you're thinking to yourself, I wish I did the same, but I don't understand how the stock market works. No worries. I'm launching my website soon with a 100% free starter membership where you can get access to my beginner's e-learning course titled Introduction to Long-Term Investing in the Stock Market. Check it out. I'll put a link in the description below giving you all the details. But regarding the stock and crypto markets, everything looks bad. Inflation data is bad. Rapidly rising interest rates are bad. Future consumer purchasing power looks bad. Future employment growth prospects look bad. And the index charts all look bad. Until some of these fundamentals change, I believe cash is the safest investment. Only those that know how to short and hedge should be navigating these markets. Okay, let's go to the charts. Starting with the S&P 500 chart. The chart we were watching was the official bear market line. As stated earlier, a cross below this line could get ugly. That's exactly what we got last week. We are by definition in a bear market. That doesn't mean we don't get a bounce from here. It's going to depend on the news. Should the news stoke fear, we fall further. Should we get some positive news or just no more bad news, I believe we could get a bounce here as most of the technical indicators are oversold. A logical first target would be about the $385 area on the SPY ETF. In that area, we might see some people try to unload some of their long positions and move to cash. As you know, I've also been monitoring the VIX chart. A lot of people have been buying put options and paying a hefty premium to protect themselves from downside risk. Look at this chart. The VIX is above 30 again. This supports my thesis that we could bounce from here. Watch the news. Watch the VIX to go below that $30 level. Now look at the trend. The VIX is up, trending since November. Risk has been increasing. This bear market isn't going to change until we see this trend change. So what's hot and what's not with the stock market? Truth be told, nothing looks good here. All 10 of the major market sectors that I track were negative. The most favorable sectors were consumer staples and healthcare, which are historically defensive. Energy has been a great performer this year, but we shouldn't be surprised by the huge decline. Look at this chart. Look at how far the energy sector ran above its long-term trend. I wouldn't consider a position until it touches this trend line, and that's subject to change. Now, look at the materials sector, one of the better performers this year. The weekly chart shows a bearish head and shoulders pattern that's played out. There are no safe sectors in this market. Let's move on to cryptocurrency. Crypto charts continue to look horrible, and as I've stated before, we need to see Bitcoin lead us out of the crypto bear market. Look at this chart. We were watching the 200-week moving average, a historically good support level. It failed us. This is bad, very bad for crypto. If you have to buy in this market, be careful. Personally, I will wait for the charts to improve before I start the dollar cost average into any crypto names. We've also been watching the weekly RSI. Historically, another great buying opportunity when the weekly RSI crosses below and above 30. We're below 30 now. Will a cross above 30 be the signal we're looking for? I'm not sure. We need to see global fundamentals improve for this space to turn around. So, What's hot and what's not in the crypto markets? For the second week in a row, 18 of the 20 market cap leaders, excluding stablecoins that we track, were negative. And before you blast me in the comments, crypto trades 24 hours a day, so you might have slightly different weekly averages than those on my spreadsheet. Winners this week were Cardano and Solana. Cardano has been horrible with the chart near all-time lows. Solana was covered by me last week. If you recall, I stated Solana had a significant support level around $28. We've put in a doji candle here, and Solana is trading around that support level. We could get a bounce here, but remember, crypto is bearish. I'm not certain support will hold. Ethereum has given up its 200-week moving average just like Bitcoin. Last week, we discussed the upcoming merge. That news didn't provide us with any price support. Dogecoin was also discussed last week. At that time, I was of the belief that Doge would touch the weekly support at 4 cents. For the week, we have Doge putting in a low of 0.0496. Please be cautious with this name. I believe we have more downside. And Shiba Inu, my favorite meme coin. Last week, I called for Shiba to add a fifth zero to its price. Look at the chart. We got that fifth zero. Remain cautious with this name here. And finally, I want to discuss Tron here. Tron has been a solid performer until the last week when speculation started that Tron's USDD algorithmic stablecoin could end up getting destroyed like Terra Luna stablecoin UST. There's been a lot of FUD surrounding the depegging of USDD. I'm not saying it's not legitimate, but look at the chart. USDD depegged down to approximately 96 cents. I'm not saying that's not scary in this market, but it's 4 cents. Look at the chart of Tether back in 2017. Tether depegged from the dollar mark to 91 cents, and today, Tether is the largest stablecoin by market cap. Should Tron stablecoin weather this bear market and remain relatively close to the dollar mark, we could see Tron have significant upside after the crypto bear stops its growl. Thanks so much for watching. Let us know in the comments below what you thought of the video and what analysis and information would be most helpful to you in the future. And as always, don't forget to hit the like and subscribe buttons and give us a visit at conquerwallstreet.com, where you can get access to all my best tools and analysis.